more advances as compared to declines. That's about 1,100 stocks up and about 700 stocks lower. And the Nifty itself is down about 70-odd points this morning. Our market master is joining us now, Mihir Vora, Director and Chief Investment Officer at Max Life Insurance. Mihir, great to have you with us here. Thank you very much. I'm stuck on that earnings question, Mihir, because we finished up with the third quarter earnings this week, and one gets a sense that there is a bit of a slowdown which is underway. And I'm not sure whether we can completely attribute all of that to input prices being high and it being a margin problem. One does sense a bit of a demand slowdown situation as well, especially in the lower end across consumer categories. So I just want to start by asking you, what did you and your team make of the earnings, and what are the takeaways for the market from here?
Good morning, Prashant. Always a pleasure. See, as far as the earnings are concerned, the two big chunks, which is banking and financial services and IT, they haven't really disappointed. In fact, we've mostly seen positive surprise on these two big index components. Yes, there are some lingering issues on the consumer discretionary side and the FMCG side. More, I would say, on the FMCG side. There is some slowdown in the rural part even now. But apart from that, we haven't really seen any negative surprises. Whatever volatility that we have seen in some of the segments is mostly on the global commodities, cement, those kind of segments, not really the consumption or the financial services side. So I would say overall the results season wasn't too bad. The rural economy is something that we are now hoping will turn around, because hopefully the worst of the rural inflation is past us, and the terms of trade now should incrementally be better for the rural economy, and some amount of income generation and pricing power should come back. So FMCG and the rural space, the lower end segments are something to watch out for, I would say. Valuations are not that expensive. The stocks have underperformed in this broad basket. But I think urban is something that we did see a lot of action in terms of pent-up demand, etc. There maybe valuations are a bit stretched, so we may see some underperformance on the urban consumer discretionary side.
Okay, underperformance on the urban consumer discretionary side. That's actually the big talking point, even not just with domestic investors, but with global investors as well, as to how inflation is definitely pinching pockets here, especially in the rural market, and that's hitting both urban and rural consumption. By the way, the market's still under a bit of pressure right now. Pre-call is coming off after the promoter said that they won't sell stake and they see no synergies with Minda. So pre-call has lost its gains. It's now up just about 1-odd%. How are you feeling about this entire sector now, Mihir? I mean, auto ancillaries, there's so much brewing here. After a long time, earnings are coming back. There's some talk of consolidation as well. A takeover battle perhaps brewing. What do you do here in this space?
Auto is something that we are hopeful about, especially the four-wheeler space. Two-wheelers fits into the rural theme, and there, I think, in the K-shaped scheme of things are not looking that great even now. But as far as cars are concerned, commercial vehicles are concerned, SUVs are concerned, there is good demand and good pent-up demand. We are just about barely at the pre-COVID levels in terms of volumes in these segments. And I think there is a lot of steam to go. And we are also past, hopefully, the peak of the margin pressures because of commodities and the chip shortages. So that I think should, be a tailwind for the segment.
Okay. Hi, Mihir. Good morning. Mihir, the insurance space got hit in the budget out of nowhere. And some of those stocks, they reacted very aggressively on the downside. But that's still an under-penetrated sector, right? Maybe multiples will not be as high as earlier envisaged. But how do you approach the space from here on, and any preference?
Sure. See, most of the insurance companies have clarified that the high-value sales probably are less than 10% of the overall pie. So the budget per se should not make that much of a difference to this segment. And as you rightly said, the penetration levels of insurance are very low. And this is one segment and one industry which really provides long-term capital for the government's borrowing plan. So I don't think there is anything that the government will, in the long term, do to destabilize the insurance segment. And valuations have become attractive in this space, I would say. Even if you look at the larger insurance companies, a lot of them have good persistency ratios, which means that even if they don't sell new policies, the assets under management, the overall AUM growth continues at 15 to 20%. So it's a long-term compounding story, I would say. And I'm not too worried about the space. Valuations are attractive now.
Mihir, I was there's a stunning statistic, and I was also made aware of it recently, but if you just look at the number of policies sold, right, look at the CAGR growth in terms of the number of policies for by private life insurers, over the last 4 years, the growth is some 3%, you know. So that is, you know, it kind of, the penetration story is absolutely, you're absolutely right, but the growth is just lacking, and that's the worry, that these high value items, it kind of limits the total market opportunity, right? Because this is the segment where growth was coming. Anyway, just so what are you most excited about, apart from banking and financial services? I mean, that's the space which everyone likes. Where else are you finding opportunities which you'd like to buy as stocks slide a little bit or sideways for some time?
So we've talked about this before, and I think the theme remains the same, which is India as a domestic economy will grow better than the rest of the world, which is the global economy, which means we are still playing the domestic consumption space, including the financials, as you rightly mentioned. And I think the capex and the private sector capex and real estate cycle is yet to pick up in a big way. While we have lots of tailwinds in terms of the government's push towards Atmanirbharta, PLI schemes, etc. These are going to ramp up much more in the coming few years. So I think the domestic capex, the domestic infra real estate, and I think the defense indigenization theme is something that we are excited about.
Okay, the defense indigenization theme. Okay. Are there any spaces that you would stay away from where you expect further earnings downgrades perhaps in the quarters to come?
Global commodities is clearly one space where prices are still holding up because of, first because of Ukraine, second because of China opening up. But if the global economy does continue to grow at a suboptimal pace, as we believe, then even global commodities should come down, including oil, steel, etc. So that's one space I would be cautious on. Another space is pharmaceuticals, where again we are seeing mixed results. Of course, it's not a very big part of the benchmark, but these are some of the spaces that we would be, cautious about.
Okay, all right. Mihir, what about this entire, capital goods industrial theme? That seems to be playing out, right? What's the preference out there?
So, as I discussed, the domestic economy is doing well, and hopefully even the rural segment, which is not doing that great, should pick up. So consumption continues to be the bedrock for India. But that I think can only give us 5.5–6% GDP growth. It cannot give us 7 to 8% growth. The additional 1 to 2% growth has to come from infrastructure, capex, and real estate, and that's where I think the government is focusing on, which makes us positive about these segments. On the government side, we have all the EPC companies, including road building, lots of airports, etc., getting constructed at a good pace. So a lot of EPC companies, and these are the new breed companies which are not leveraged. I think most of the old ones are gone. So we have a new bunch of EPC companies. On the capex side also, we are seeing a lot of traction in some of the sub-segments like electrical equipment, motors, etc. So that's again leading us to believe that there is some capex happening on that front. And I think all of this will also require a lot of buildings, which again brings us to the EPC companies. And the defense indigenization, of course, is a mix and match. A lot of companies in the capex space, as well as the different industries, have subsidiaries or exposure to steam. So that's a much wider basket, including public sector units in the defense space. So that's basically the overall lay of the land for the investments theme.
Okay, by the way, the market is cutting its losses a bit. So the low that we hit was 17,927, and now we're back